So I just got this email and I wanted to kind of go through it with people. I think it's hilarious, to be honest. The title of the email says, and this is from a group called The Hustle. I highly recommend it. It sends you a daily email on what's going on in the world, what to look out for, what to look for as far as opportunities, as far as risks out there, primarily from a financial perspective. So if you're interested in keeping your money and protecting it, growing your wealth, giving back more in a more meaningful way through charity, The Hustle is a great resource for you to kind of look through. I highly recommend that you subscribe to it. But anyway, today's email was interesting to me. The title says, billionaires are practically begging to pay more taxes in a new open letter. And it goes on to say, American billionaires are know where to find the cash to correct climate change, the public infrastructure crisis, and other pressing social problems, their own pockets. And so there was this open letter that was published on a thing called Medium. And here's the letter. It just says, an open letter to the 2020 presidential candidates. It's time to tax us more. Following is an open letter from a group of wealthy Americans who should be affected by a wealth tax. It does not imply or an endorsement for any candidate. The call to action is simple. Basically, it's addressed to 2020 presidential candidates and says we're writing to call on all candidates for president, whether they are Republicans or Democrats, to support a moderate wealth tax on the fortunes of the richest tenth of 1% on us. The next dollar of new revenue should come from the most financially fortunate, not middle American and lower class income earners in America. Now, what exactly is going on here? The letter goes on to address the fact that they, the wealthiest 1/10 of 1%, support this increase in wealth tax, and that you should be focusing on them and going after the tax dollars on them and not middle class America, which I totally love the message and the marketing of that, trying to take the eye off of middle America and take the eye off of the middle and lower income class in America as far as levying taxes. I love it. Don't get me wrong. But as I'll show you shortly, it's all a ruse. It's a hoax. It's a bunch of BS. And here's why. They go on to say a wealth tax is a powerful tool for saving climate crisis. Is that true? I don't think so. A wealth tax is an economic winner for America. A wealth tax will make Americans healthier. Is that true? I don't think so. A wealth tax is fair. I'm about to show you why that statement is just blatantly false and misleading. A wealth tax strengthens American freedom and democracy. Does it really? Is that really true? A wealth tax is patriotic. I'm about to blast that one out of the water, okay? Now, what I want to draw your attention to, there's a little-known website that I love to reference. It's called charitynavigator.org. Charitynavigator.org is a compilation of a bunch of 501c3 tax-exempt organizations, all right? Now, here's the reality. In America, there are two different tax systems. There are two different tax systems in America. One is denoted by the 1040 tax return that everybody knows. 99.5% of all Americans use the 1040 tax return. But there's an entirely different tax system out there called the 1041 system. The 1041 system, if you go to the irs.gov website and search 1041, you can find the 1041 tax return on the IRS website. Now, here's the kicker. The 1041 form is an income tax return for estates and trusts. What is a trust? A trust is a separate entity that you put your holdings, your wealth, your income, your businesses, anything of value into a trust to protect it. A trust actually holds those assets in a trust, in a legal structured document, in a legal structured entity that actually has an EIN number. The reason that you file an EIN number is to let the IRS know that you're going to be filing a tax return. It's just for estates and trusts. Estates and trusts file a 1041 tax return, not a 1040 tax return. See, taxes follow title. Taxes follow ownership. If you want to own your business, if you want to own all your income, if you want to own all of your assets, then the government's going to tax you on it. And you fall into the personal income tax brackets, anywhere from 12% on the low end to 37% on the high end. But if you're willing to give up ownership of those assets to a trust or to a private foundation, everything changes. Everything changes. Let me pull up the IRS website again and show you what I'm talking about. Here's a Form 990-PF. This is a return of a private foundation. Now, a private foundation is a trust treated as a private foundation. It is tax exempt. And so if you go to the IRS website, you can go to irs.gov Form 1090 or 990-PF, sorry. And here's the IRS website. Here's Form 990-PF. You can download this form online at the IRS website. This is a 501c3 tax-exempt private foundation return. All right? And so when we see things like this where you have an open letter from the richest 0.1%, and they're saying that they need to be taxed more, I want you guys to think about, I want everybody out there to think about that for a second. Are they being completely honest and upfront with you? I mean, if you look at some of these names, Abigail Disney, George Soros is also named in here. George Soros, okay? These are some of the wealthiest families and people on the planet. And if you go to charitynavigator.org, you can see that those families don't pay taxes. What they do instead is they give up ownership of their income, ownership of their assets to private charities, private foundations that file a 990-PF form, and the stock and the wealth is held in those private tax-exempt foundations. Here's another example. I'll show you the Soros. Here's the Soros Fund Charitable Foundation. Soros Fund Charitable Foundation, based out of New York. Here's the EIN number. All an EIN number means is that you have to file a return to the IRS and show what money was taken in, what expenses were taken out of the actual revenue stream. This is a 501c3 tax-exempt private non-operating foundation that files a 990-PF. Okay? You can find every different wealthy family on this website. Alec Baldwin, Andy Roddick Foundation, Jeff Bezos, the Bezos Family Foundation, based in Mercer Island, Washington. Here's the EIN number. It is a private, independent, private, non-operating foundation that files a 990-PF. So when you hear about these wealthy individuals, Warren Buffett, when you look at the Buffett Family Foundation, Buffett Early Childhood Fund, here it is. Here's the EIN number based out of Omaha, Nebraska. It is a 501c3 tax-exempt organization, private non-operating foundation. And when you look at the actual tax returns, you can see that when they're saying that they're going to give away their wealth to charity, take a look at the tax return, the 990-PF, the return of private foundation of Buffett Early Childhood Fund. Look, he has it checked off here. It's a 501c3 exempt private foundation. And when you look at the assets of that foundation, it's publicly traded securities. When they say that they're giving up their wealth to charity, what charities are they giving that wealth to? What charities do you think that they're actually supporting? That's right. It's their own private family foundations. And when you gift or grant those assets over to a foundation, now it's in a tax-exempt status. There is no tax due on any of those assets. And you can see right here the investments that this foundation owns Investments in corporate stocks scheduled, Buffett Early Childhood Fund, same EIN number, Berkshire Hathaway Class B shares. In 1 year alone, he gave away $32 million worth of Berkshire Hathaway Class B shares to charity. It just so happened that it was his own private family foundation. All right? So when you're reading these letters, I want you to kind of read this stuff. And when you're hearing these politicians talk about a tax on the rich, taxing the wealth at a greater level, you got to start thinking about this differently. You got to start considering the possibility that they're not really paying tax at all. These wealthy individuals do not pay personal income tax because they've given away their wealth to these entities, to a trust or a foundation. And so they don't pay any personal income tax. They're not going to show any wealth on a 1040 tax return. All right? If you want more information on this, I've got a website that you need to go to. This is my personal website. It's called purposedrivenblueprint.org, purposedrivenblueprint.org. And in this process that I take my clients through, what we do is we focus on finding your purpose, and then I show you through the use of trust and foundations and giving your assets over to a trust and giving your assets up to a foundation, how to actually fund your mission and purpose in life. All right. At the bottom of this website, I want to show this to you. This is why these letters are such BS, and why, when they say things like, up here they say that a wealth tax is fair. All right. Or a wealth tax is patriotic. That's what it says in this letter. I want you to read this quote that was from an actual hearing. It was a Supreme Court hearing back in 1934, Gregory versus Halvering, 1934, and the decision by the Supreme Court was that anyone may so arrange their affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. Here's the kicker. There is not even a patriotic duty to increase one's taxes. That was back in 1934, a decision by, in this case, Gregory versus Halvering. All right, Judge Billings' learned hand. Judge Hand is one of the most quoted judges in Supreme Court history. All right, he said this. He said, in America, there are two tax systems, one for the informed and one for the uninformed, and both are legal. Both are legal. And of course, in this decision, Commissioner versus Newman, back in 1947, this was a dissenting opinion by the Supreme Court. And it said this: over and over again, courts have said that there is nothing sinister in so arranging one's affairs as to keep taxes as low as possible. Everyone does so, rich or poor, and all do right. For nobody owes any patriotic duty, any public duty, to pay more than the law demands. Taxes are an enforced extraction, not voluntary contributions. To demand more in the name of morals is mere cant. So again, I want you to think about this stuff. When you're hearing these politicians screaming that it's your patriotic duty to pay more in taxes, I want you to think about that for a second, and I want you to understand and literally know that I want you to consider that these wealthy individuals, the wealthiest 0.1% in America, don't pay taxes at all. They don't pay taxes at all. So all of this political jargon and political back and forth has nothing to do with them. They know that, and they're just being deceitful by saying that it's your patriotic duty to pay more in tax, because they don't do it themselves. If you have any questions, again, go to purposedrivenblueprint.org, fill out this application. There's an apply now button. You can fill out this application. We'll get in touch. We'll review your situation and see if this trust and foundation system might be a fit for you.